Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, we're back with another 10-minute trade. I'm going to show you in this video, hopefully in 10 minutes, a fabulous trade I love to do using a buy and hold stock. Yeah, that's right. I use my buy and hold stocks. I try to generate an extra dividend using a covered call premium to keep the cash flow coming in. Hey, look, that's what we talk about on my channel. Cash flow on the table. If we want to live the good life in retirement, pay some bills, hey, look, we have to have a cash flow system that works, is consistent, and you found it right here. So, hey, look, before we get going with this 10-minute video trade, let's go ahead and subscribe to the channel. I come back every single week, show you timely and relevant cover call trades, trying to up your game. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Okay, so the trade setup goes like this. We're talking Bristol Myers. Absolutely love Bristol Myers for my buy and hold. Try to collect that extra dividend using a cover call right. Now, again, understand this is a buy and hold stock for me. I'm really looking for stock appreciation and dividends. That is the reason I'm holding Bristol Myers. But during its off months, right? During the non-company event months, ex-dividend and earnings, we have about 2 months where we could actually use a 30-day covered call. Now, what I love to do is this. Again, Bristol Myers buy and hold stock. I want to make sure when I write the covered call, right? When I do the covered call, I want to make sure that the stock is sort of peaking, right? I don't want it to be at the bottom of its trading range. And then I try to do this because over the next 30 days, it could be likely that it'll move higher. Don't want to do that. I do not want to do this strategy when it's at the bottom of its range. We want to do this when it's at the top of the range because it is more likely that it's going to peel back. Now, this is over a 30-day period. So the likelihood that it'll peel back, that's what we're looking for. Doesn't mean it will not continue to go higher, but in the case of Bristol Myers and Merck and 3M, these stocks, usually their run gets extended. Wall Street will pull them back, take some profits, and then they'll run them up again. Bristol Myers is a perfect example of this. You could see they love moving it higher, peeling it back. That's where we're at right now with Bristol Myers. You could see that it's peaking. It's hitting all-time highs right now. And right now it's trading for 78x. Now, when I placed this trade, it was not trading for 78x. It was trading for 79. And this is where I wanted to make that decision, right? I had to make the decision. Is it peaking enough where I can write that 30-day covered call, pick up a covered call premium that equaled essentially a quarterly dividend, right? Because the idea is this. I don't want my shares taken away, so we're not going to do the at-the-money strike, right? We don't want to do the at-the-money strike because if it does not peel back and goes higher, I'm going to have my shares taken away, or I'm going to have to add to my cost basis, right? I'm going to buy it back for more money than I received, and we're adding to the cost basis, and that gets me nowhere. I want to write the out-of-the-money strike, give this a full 30 days, and we're looking to pick up what is about equal to the company's quarterly dividend. In the case of Bristol Myers, that's going to be about 54 cents. So if I can get anywhere near 54 cents, I'll take it. And the strike price is going to be up here because the likelihood of it peeling back and heading up to here is very unlikely. So as you can see, this is the trade I put on. And December 7th, Bristol Myers was trading for $79.89. And I picked that out of the money strike. That's like a 25 delta. No way it gets there in 30 days, particularly with its recent run. I'm going to go back to the charts. I'm going to show you that run and why I believe the 84 strike is where I want to be here. I get 43 cents. I couldn't get that 54 cents, but I'll take the $215 crumb. And we're just looking to pick up an extra dividend via a covered call premium every other month or every 2 months. We try to do this all year. I've been doing this with Bristol Myers all year, and I'm going to show you how many extra Little crumbs I've picked up using Bristol Myers this year. Let's go back to the charts, look at the trade setup now that you know where it was trading, what the strike price is, and how much time I've given the call buyer. Because as you can see, I essentially give them 35 days. I want to interrupt this video right now and ask you to bang that like button. It absolutely lets me know you like what I'm doing. If you like what we're doing and want to be a part of it, you have to go to Facebook. Go to Facebook, search CTP Dashboard, and I'll tell you what, you're going to see more exclusive content being posted on Facebook. And look, at the end of this video, I have a very special membership offer for you. I need you to check it out. I love doing this stuff for you. Give me a little love and bang that like button. It lets me know you like what I'm doing. Now back to the video. So looking at the chart here, you can really see with fins in here how the setup is working. You could see where resistance potentially could be all the way up here, way above where it's currently trading at 78. So for this thing to test resistance, it's really going to have to make a hell of a move. I don't think it even gets there. Notice how it's been trading sideways, and then it's selling off to this support line right here, and it retests that support line. So right now, the 78X number could be near-term support. However, it has to travel above 81X to now start to break resistance. It has to stay above that for about 3 days for Wall Street to feel comfortable with that. Looking at Bristol Myers throughout the year, you could see it absolutely does not jump off the charts when it's trading like this. The likelihood of it moving higher into the 80s, well, it could. 84 is a strike price that's out there just far enough. I don't think it's going to get there. So again, the mindset is simple. Every time Bristol Myers makes that high, it's going to peel back, and I'm able to write the cover call on the top end, collect the premium in the hopes that it's going to fall. And you could see every time it hits that top end, it does fall. And look what we get. We get the opportunity to buy the option back, which puts about 45 cents in our wallet that we otherwise wouldn't have had, which is essentially another quarterly dividend. I call this doubling my dividends using a buy and hold stock, a stock that somebody would buy it and hold it, never touch it, right? They'll collect those dividends throughout the years, but look at all these fabulous opportunities to trade this thing. And we do this time and time again. Now I want to show you Merck before I let you go here. Merck has had an unbelievable run. And I've been telling my members this, look, these pharmaceutical stocks are a safe haven in this market. I absolutely do not know why they pick the pharmaceuticals versus the utility stocks. Usually it's the utility stocks they pick and run up when we have volatility, but not this year. You can see, look at this run. This is a parabolic move in Merck. Merck does not move like this. It is a sideways to higher trade that plateaus. This thing has absolutely moved from 85 to 110, okay? That is a huge move for Merck. Now, I've been using Merck all year, the same strategy. When it peaks, we write the covered call, and it falls, we buy the option back, collecting that extra dividend via a cover call premium. Merck is one of the stocks that I love to use. We love to use Bristol Myers, Merck. But this is how a buy and hold investor, if they learn the strategy of writing covered calls, can use these little moves in the stock when the stock gets higher and it's going to peel back. And I'll tell you what, even if I bought it back and say, for example, I get 50 cents, and Merck starts to peel off, and now the option's trading for 10 cents. I can buy this option back, no risk. It's a buy and hold stock, so it's no risk. I essentially pocket 40 cents, and we look to do it again and again and again. This is the mindset you should have when you need cash flow, right? You have these buy and hold stocks that are just sitting in your portfolio. Hey, on the company's non-company months, try to use them to pick up that extra dividend via a covered call premium. Now be sure to sign up for your cash flow newsletter. That's right, January I'm going to kick off the new year with a January cash flow covered call cash secure put newsletter. I want you to take a peek inside of what my members see. My cash flow newsletter is absolutely going to show you some of the things that I send to the members daily, right? All my trades, trade setups, and what is John watching? Remember, seeing the world through my eyes. A successful, active trader that has to put money on the table. None of these trades are for YouTube money. This is real money I'm using, winning and losing. Okay, I want you to go sign up for the free newsletter. And hey, look, take a look at the premium membership. You know, I'll tell you what, it's like 45 cents a day. I want to welcome you aboard, right? Come on board. You get access to all the tools I use when I do my trading, including you see all of my trades in and out, all the commentary. I'll tell you what, at the end of the day, I'd sign up for it. Look, and you also get access to the world famous upgraded CTP dashboard looking for your next covered call candidate. Hey, look, go to cptdashboard.com, sign up for the newsletter, check out the premium membership, and get your free month. I give a free month. Why not? Check it out. Would love to welcome you aboard. Next video is going to be a fun one because we're going to talk about how we manage a trade that has gone bad. Yeah, a trade that has gone bad. I'm going to show you how I manage it. It is going to up your game. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.